Hello. Uh, Hello, the grade 12 learners. I'll be treating cash flow statement from any June paper. So I'm going to use this Gauteng June examination 2024 paper 1. So let's check. It was question 2. An interpretation, 40 marks, 32 minutes. I'm going to question 2. Yes. So question 2 here, they are saying that I have to calculate the cash flow from operating activities section. Cash flow from operating activities section. All this is the operating activities. They say calculate the operating profit before working capital. Before working capital, I'll split my screen. They say before working capital, profit before working capital. For grade 12, kind of simple. You don't have to do a lot of stuff. You just have to say number A. It will be profit before working capital. You just have to say net profit before tax. Then you add interest on loan. Then you add the depreciation. Then you're done. 4 marks. Net profit before tax, you're gonna get it in a smaller income statement. Before tax 2024, that one is this one. It's 1,995,000. You add interest on loan on 185,000. You add depreciation. So the depreciation is not given, right? So you apparently, if it's not given, you have to calculate it, right? Now let's check what is happening. Now these no fixed asset were bought or sold. So what does this mean? We don't have the movement, meaning it means that your carrying value at the beginning and addition it's not there, and the disposal is not there, but the depreciation is there. Then is equals to carrying value at the end. Now your movement, this is negative, this is positive, this is negative. Now you don't have addition, you don't have disposal, but you have the carrying values. Carrying value at the beginning of 288,2884, that is the beginning. Now the end is 2,314,000, which is this one and this one, right? Now what are you going to do? You do the bottom up, meaning that these carrying value at the end minus carrying value at the beginning, you get the depreciation. Now let's calculate. Then I'm going to have 2,314,000. I minus 2,884,000. My solution is 2 million and sorry, I did a mistake here. 2314 minus 2884. Hey, calculated here, you are. Change the calculator. is 2314 minus 2884 is 570. I get 570,000. So that is the depreciation. So the depreciation date will be 570,000. And therefore you add according to the formula that I've given to you. 1995 plus 185 plus 570. I get 2,750,000. It's 2,750,000. So that's the answer, 4 marks. So coming to the next question, they say changes in working capital. I'm going to have working capital. I have inventory. Then I have trade receivable. I have trade payable. Now, this is asset, and this is asset. This is liability. Now I'm going to give you the information. So when asset do what? When asset increases, the effect will be what? Will be outflow. When asset decrease, the effect will be what? Inflow. Altogether, according to this. Therefore, when a liability do what? Increases, it will be the opposite of what? Of asset. It will be inflow. Then when the liability do what? Decreases, the effect will be what? Will be outflow. Based on this. Now, so far, I'm going to compare the inventory for last year and this year. Inventory for last year. Inventory, it will be the trading stock and the consumable stores on hand. So this is the inventory. Trading stock and consumable stores on hand. These ones. That is inventory. So I'm going to say inventory 2023, inventory 2024. Compare the two. Now, inventory for 2023, I take trading stock of 870,000. I add consumable stores on hand of 13,400. Now, for inventory 2024, I take the trading stock of 1,005,000. I add consumable stores of 14,250,000. Now, I will get my solutions there. I'll get my solutions. If I say 870,000, then I have to add 13. Then 400. My solution, it will be like 883,400. Now this one, I say 1,005,000. Then I have to add 14,250,000. 14,250. I get 1,019,250. What does this mean? It means that the inventory increased from this 883 to 1,000,000. So increase in inventory. Inventory is an asset, will lead us to what? To outflow. So increase. So the difference between the two will be an outflow. Right? So I am going to take the difference between the two numbers. Minus 883, 400. The answer will be an outflow. Outflow of 1 135,850. 135,850. So you show the calculation 1,019,250 minus 883,400. So definitely it will be my 5 marks, that one. Now you go to trade receivable. In trade receivable, you are going to exclude SARS income tax. So trade receivable, obviously there it will be the debtors control and the deposit. Yes. And the deposit for water and electricity. So do the same thing. Trade receivable 2023, trade receivable 2024. I'm going to take the debtors control and the deposit for water and electricity. Now let's see. I'm going to take 139,400, 139,400, which is debtors control. I have to add the deposit for water and electricity of 15,000. So it means now I said I will have what, 154. I'll have 154,400. When I take trade receivable, I'm debtors control of 139,400, and then I add 15,000 for deposit of water electricity. Therefore, I get 154. So when I take trade receivable, for 2024, I'm going to take the debtors control of 122,800, and therefore I have to add deposit for water and electricity of 30,000. So yeah, I'll get my trade receivable in the year 2024. You add 30,000 there, you'll get 152,800. So get 152,800. Look what is happening with the receivable. It went down from 2023 to 2024. It went down 154 to 152,800. It's decrease. When the asset do what? When the asset decrease, you're going to have what? Inflow. Inflow. Now you take the difference. It's 154,000 on the dot. You minus 152,800. So minus 152,800. Quite simple. 154,000 minus 152,800. The answer is 1,200. 1,200. Very simple. Very, very simple. I hope you understand. Coming to the trade payable, you're going to consider creditors control and SARS payee. I'm going to consider creditors control and SARS payee. Do the same thing. You're going to say trade payable. Trade payable in 2023. The trade payable in 2024. Creditors control 104,300. SARS payee 1478. This one also trade creditors control 89,200, you add SARS payee of 12,500. Now you're going to say 104,300, you add 14,780, and then you get what? 119,808. Now 89,200, and then you add 12,500, and then you get 101,700. Now check, the 2023 was 119. Now it went up. It went up to 109. Oh, it went down. Sorry, it went down, decreased, right? Here, it has decreased, so it went down. So it means when the liability decreases, meaning is what? Outflow. Now decrease, here it will be what? Decrease, here it will be what? Outflow. Outflow. Now let's see. You're gonna take the difference between 119. Is it 119 what? 119 080. 080 and 80 minus 101 700. Okay, you should take the difference. The difference, it will be how much? 17,308. Therefore, what do? You add the like terms. You add the like terms. I'm going to say change in working capital. The sum of the negative are more than the sum of the positive, meaning the final answer will take the sign of the bigger number. So when I take the sum of the negative is 135,850 at 17,380. I get 153,230 as the sum of the negative. I take the difference between the sum of the negative and the sum of the positive. So I minus 1.2, so it means it will be 152 and 30. That is 9 marks. Now coming to number C. Number C, they say income tax paid. Income tax paid. So we follow the principle. Income tax last year, this year. Income tax last year, this year. Income tax last year, this year. So income tax is the tax that you have to pay for the current financial period. Now let's check. It will be the difference between the net profit, the two net profit. Net profit before tax minus net profit after tax, I get income tax. 1,995,000 minus 130. Is it what? Let's check. 190 or 130, 136, 196, 500. Okay, it's fine. So I get the income tax, which is 598,000. So this is the income what? Income tax. Is the tax that I have to pay for this current financial period. Now let's check if SARS last year was owing me. If SARS was owing me last year, obviously I have to reduce this tax for this year. If I was owing SARS, it will make an addition. I have to pay the last year debt together with the current tax. All together. Now coming to the SARS income tax. Look, last year, I start with last year. It's DR, meaning SARS was owing us asset. So what should I do? I have to reduce the current year tax. You see, to 27,000. I have reduced the tax that I have to pay. Now, they say that this year, it results that at the end of this year, I owe them. What does this mean? It means that I paid less than what I supposed to pay. So I paid less. So I paid how much? The difference. You see, I have to minus. Now I'll get the solution there. My solution, it will be this one. That is my solution. Let's check. Let's verify. 598,000 minus 27,000 minus 48,000. It's not the solution. This one. The solution is 523,000. So normally this one, I used to come up with the solution for this one all the time. I said the principle is to say income tax, then last year, then this year. So now I have 4 formulas that I need to take into consideration all the time. Number 1, 2, 3, 4. Now these formulas, I have derived them from the ledger account, whereby this is the income tax. Income tax all the time. You start with the income tax, income tax, income tax, income tax, income tax. Now, last year, this year, income tax, last year, this year. I can have a DR and a DR, a CR and a CR, a DR and a CR, a CR and a DR. So DR is a minus and a plus. Now this one, CR is a positive, is a negative. So now DR and a CR, they are not the same, but they will share the same sign. So it will be a minus and a minus. So CR and a DR, it will be a positive and a positive. You can use this, grab this is fine. Or you do the ledger account if you don't know how to interpret the information. Good. So, where is the bad question paper? Bad question paper. The next question is number D. It's number D, which is dividend paid. Is dividend paid? 3 marks. Dividends paid. Dividends paid is equals to the interim plus final last year. That's it. The final is the shareholders for dividends for last year. So now I take the interim. Where is the interim? They say that the interim was paid somewhere. Oh, we are given the total dividends for the year. Yeah? Total dividends. Let's say total what? Dividends. The total dividends involve the interim and the final. So I have the total dividends of 372,250. I need the interim. The final, I know that is the shareholders for dividends. So I'll go to the information, get the shareholders for dividends for this year. This year, shareholders for dividends 2024 is this guy, 157,500. Now I'll say 157,500. To get the interim, I will take the difference between the total and the final. 372,250 minus 157,500. I get the interim. Now I'll say 372,250 minus 157,500. My solution, it will be 214,750. Altogether, this is my interim. Now I'll say interim is 214,750 plus the final dividends for last year, meaning the shareholders for dividends for last year. Now shareholders for dividends for last year is this guy, 107,250. 107,250. Then I get the dividends paid. Done. 3 marks. Now it means my solution will be this guy, 322,000. Now I get 3 marks. Now they say cash flow from operating activities, 6 marks. Operating activities. Easy marks now. Easy marks. Easy marks. It's cash flow from operating activity. I start with the cash generated. Cash generated from operation. So I will take the net profit before changes in working capital, which is number A. Ne? I add, which is number A, I add this one. I will take the profit before working capital of this guy, right? Then, which is 2,750,000, okay? 2,750,000. 2,750,000. Then I have to add the changes in working capital. So look, I'm going to add changes in working capital. My changes in working capital, it was a negative. You see, I'm adding a negative. When you add a negative, it becomes negative. I'm going to add a negative 152 and 30. So when I add a negative, it becomes what? A negative. So I'm going to say minus 152 and 30. When you add a negative, it becomes a negative. So now I'm going to have 2,750,000 minus 152 and 30. Then I get 2,597,970. Now I go to interest paid. So the interest paid is the interest expense. Is the interest expense? Is the interest on loan? Is the interest on what? On loan. You will find it in a smaller income statement. Now, for the fact that it's paid, it is outflow. For the fact that it's paid is outflow. Money went out. So the interest on loan is 185,000. 185,000. Therefore, now I'll go to dividends paid. Dividends paid. Now, for the fact that it's paid, money went out. Outflow. Now, dividends paid is what we got earlier on, which is 322,000. So, 322,000 out. Now, go to taxation paid. For the fact that it's paid, becomes what? Outflow. Clear? Now, what do I have now? My tax paid, it was these 523,000 is 523,000. So now I have to add my like terms and compare. My final answer all the time will take the sign of the bigger number. So I add this the sum of the negative. I compare with the sum of the positive. Now at 185,000, I add 322,000. Then I add 523,000. Then I get 1,030,000. So that sum of the negative is less than the sum of the positive, because the sum of the positive is 2 million. So my final answer will be an inflow positive. So I take the difference between the sum of the positive and the sum of the negative. Okay, the difference, it will give me how much? My difference will be 1,567,970. Good. Now, from there, I go to 2.2. I go to 2.2. 2.2, it says calculate the cash flow from financing activities. So this one is the examiner's favorite. This one is the examiner's favorite. Wow. Now let's check. They say that calculate the cash flow from financing activities, and firstly you have to start by doing the retained income. So you have to start with the retained income. Retained income. So all the time, this one, you start with the balance, right? You want to start with the balance at inception. At the beginning, you add the net profit. You add the net profit after taxation, after tax. Therefore, you do what? You subtract what? You're going to subtract the repurchases. Then you're going to subtract the dividends, the dividends on ordinary shares. Are we together? You subtract the repurchases and the dividends, then you will get the remaining funds that need to be retained. Now you're gonna be having the interim, you're gonna be having the final. Then you're gonna have the balance at the end. That's the balance at the end. All right, let's follow the formula. Let's follow the formula. Now we have the balance at the beginning of 1,875,000. You can see this amount is this guy, right? 2023. The end, it will be this guy. It will be this guy called 2,661,750. Good. Then from there, you're gonna take the net profit after tax given there, which is that guy. Okay, yeah. All right. So I'm gonna use a highlighter. So the net profit after tax is this guy. So I'm going to say is 1,396,500. Good. Then the repurchases all the time, I use the price above average. The above average. Above value. Right? Now here, if you can check, look at the repurchases. They say that the shares repurchased from unhappy shareholder. These shares were repurchased at 17 rand per share. The average price was 12,75. So to get the above all the time, we take the transaction price. Transaction price is the price at which the shares were bought back at, which is 17 rand 50, minus the average price all the time. Now transaction price is the original price at which the shares were bought back at, which is 17 rand 50, minus the average price of what? Of 12 rand 75. Then you get the price above average. The price above average, it will be what? 17.50 minus what? Minus 12.75. Then you get 4.75 rand. So this is the price above. Then you're going to say the price above of 4 rand 25. Then you multiply with the shares repurchased. So how many shares were repurchased? How many shares were repurchased? Oh, it's a balancing guy. How so? Is issued at the inception, at the beginning, is additional. Are we together? Is additional. Are we together? Then we have the repurchases. Then we have issued at the end. Now the repurchase is negative. Now plug whatever that you have. These are the shares from the previous year at the end. It becomes the opening this year. Now it will be 650 at the beginning. And now you're going to have additional shares of what? Of 100,000 which were issued during the year. Now 100,000 here. Now the repurchases is a missing guy. You have the issued at the end. This is 100,000 which were issued at the end. Were in issue at the end, which is what? 700,000. What are you going to do? Bottom up. Bottom up meaning the positive value becomes negative. The negative value becomes what? The positive. Now the starting point, it will be the same sign, meaning the repurchases is going to be what? 700, and then you minus 100, then you minus 650. Then you're going to get the guy called the repurchases. You're going to get a negative something. Now you're going to say 100,000, then you minus 100,000, then you minus 650,000. The answer is 50,000. So answer is 50,000 shares. So the shares repurchase is 50,000. So it is 50,000 shares. Now you're going to say 50,000 shares times by 4 rand 75. Then you get 237,500. Now remember we got the interim from the dividends paid on our formula. On our formula here, the interim, it was 214,750. 214,750. So 214,750. Now, and also the final dividends, it was given also this year. And the total, it was given here. The total, which is 372,250. And the final also it was given, which is showed us for dividends this year. That's the final dividends this year, which is 157,500. Then that's it. Now you come to the examiner's favorite. You come to examiner's favorite. Cash flow from financing activities. So financing activities, it involves 3 things. Is proceeds. Proceeds are from issued shares, meaning is the additional shares value. So you can say additional shares value, positive. You sold the shares, you receive something there at the company. So all the time positive, the proceed. Proceed is the cash received. Cash received. Cash received when selling. That's proceed. Cash received from selling. Now, let's see. We sold the shares here. We sold the shares of 100,000, but you don't know the price. Look, I'm going to complete my share capital. So here is 50,000 shares. Now I need the share capital at the end. My share capital at the end is this guy, okay? Which is 8 million. Which is 8,925,000. Now, the repurchases, I use the average price. Ordinary share capital again. So the average price was 12 rand 75. It was 12 rand 75. Now say 12 rand 75, 12.75 times by 50,000. Now I get 637,500. Now I take the share capital at the beginning, which is 7,800,000. Now this guy become a balancing figure. Now bottom up, this guy plus this guy minus this guy. So I will say the value at the end of 8,925,000. Now I have to add the repurchases of 637,500. Then I have to minus the beginning of 7,800,000. Then I get 1,762,500. Now this is my proceed. I have to show the examiner the calculation. So I will say 8,925,000. Then I added the 637,500 for the repurchases. I minus the beginning value of 7,800,000. Then I got 1 million. I got 1 million. Let me change the color. $1,762,500. Funds used to repurchase. Outflow, we bought back the shares. Here we're going to use the transaction value. Oh, yes, the transaction value. Transaction price, the real price we bought back at, which is 17 Rand 50. Then we multiply with the shares repurchase of 50,000. Or I can take the share capital repurchase. Share capital at the repurchases. Then I take the retained income at the repurchase, I add them. Then I'll get the values. The share capital. The share capital repurchases, it was this guy again, which is 637,500. I can say 637,500. I can add the one for the retained. Repurchases under retained, it was 237,500. 237,500. Out together. So I will say 17.50 times by 50,000, and then I get 875,000. So same applies when you take this guy and this guy, you add, you're gonna get the same figure. Now, coming to the last one, change in loan. Change in loan. When you are given the loan like this, all the time this is a repayment. It will have what? A repayment of loan. So repayment, you paid, money went out. But we need excluding. We need excluding what? Interest. So you're gonna take the repayment of loan, including the interest of 710,000. You minus the interest on loan. If you can check the interest capitalized on loan there, it is the 185,000. So you're gonna minus 185,000. Therefore, you get 710,000 minus 185,000. You get 525,000. Clear? Then you add the sum of the negative compared with the positive. Now I'm going to add the sum of the negative. The sum of the negative in for 1,400,000. The sum of the positive again 1,762,000. The final answer, take the sign of the bigger number. So I take the difference there. So the difference, it will be 362,500. That is cash flow. Cash flow. I did two-part operating activities and finance activities. Thank you very much.